How we doing, guys? Back with another video here, and in this video I wanted to discuss the journey of most new traders and what you have to go through to become a profitable trader. And we'll start off right from the beginning. So let's say you're a new trader and you've heard about trading, you've heard about the success and the wealth and all the Twitter posts, people posting their money, cars, flashing all these things, and you want a piece of the pie now, right? So you decide you want to learn about the stock market and potentially become a trader. First step you take is obviously, do your research, maybe Google, go on YouTube, find some videos of some traders that are successfully doing it already, and you learn as much as you can. So a lot of the teachers and gurus out there will tell you studying is key, and to an extent they are right. You do need to learn, and you do need to absorb all this knowledge before you can begin anything, and it's no different with trading. So let's say you've been studying now for about 3 to 6 months and you feel you have a pretty good grasp of the markets, so you decide to start a live account and you fund it with, let's say, $2,000. So you got an account now, and you're trading with a $2,000 account, and you're about to place your first trade on a stock. You're pretty excited, but you're also nervous because all the emotions are running through you right now, and this is your first trade ever. So you are pretty much an emotional wreck. Now, you place the trade, and let's say there's two scenarios. So we'll go with the first scenario. You place your first trade on a stock with all the research you've done, knowing where to enter and where to exit, and knowing which stocks to trade. You place your entry, the stock shoots up 50% within 20 minutes of your entry. So you just made 50% in 20 minutes on your very first trade. That's awesome. That's great. Now we go to scenario 2. So scenario 2 is a bit of pretty much the opposite of scenario 1. So you place your trade, and the trade actually goes against you 50%, and you just blew 50% of your investment right there. Now these two situations are going to create two very different emotional responses in you as a trader. The first one, making 50% on your first trade, that's awesome, that's great. But as a new trader, I would have much rather preferred to take scenario 2. Now, why is that? Why would anyone want to lose money on their very first trade? The reason being is the trader who took scenario 1, he made a bunch of money, sure, but now he has this idea in his mind that the stock market is easy and he can just do that over and over and over again because he is the best trader in the world, right? This is a destructive mentality to have as a trader, and he will shortly find that out very soon. The difference is in scenario 2, the trader is humbled by the market. Taking a loss, taking a rather big loss, really wakes you up to the reality of the market, and you don't have that false sense of euphoria that the first trader experienced in the first scenario. So this second trader is a lot more cautious now going forward, and he knows the reality and the possibilities of the market and how much money you can lose if you're wrong. So we'll fast forward about 3 months from now, and during this time you've blown up 1 or maybe even 2 accounts. But during this process you've actually learned quite a bit, and you've learned the importance of risk management and starting to implement that into your trading. This has given you some consistent results now, and it feels great. Instead of losing, now you're seeing some winners, and that's awesome. So you're in the next phase as a trader, and this phase is, I like to call it false hope. So what happens in this phase is you feel good, you're making money, nothing too crazy, you're making some small winners here and there. Then all of a sudden, out of nowhere, there comes this one big loss, that one that just wipes everything out. So all of your hard work during the months just gets completely thrown away just because of one bad trade. Now, this is actually the phase where most traders are stuck in, and I believe we need to dive deeper into the psychology behind this phase. So, why do traders go through this phase? This is the main struggle any new trader faces on their journey. Getting past this phase, this one phase that just holds them back from becoming profitable. They know how to make money in the markets. They can do it consistently, yet they just give it all back just like that. So why do they give it all back on one trade? Well, at this point, you've learned everything you can about the markets and how to trade. But now it's time you shift that focus into yourself and study your own psychology and study how you think about the markets. This is what separates the successful from the non-successful. It's the psychology. It's how they think. How you think determines whether you are profitable or not. Learning about the markets is great, and it's necessary as a new trader. But that doesn't determine whether you're going to be successful or not. Your mentality and your mindset is what's going to separate you from the 95% that fail in this game. So what do you need to do in order to become part of that 5% now? You know how to trade, you know what trades to look for, you have your risk management, which you sometimes don't follow, but now you need to put it all together. So the way most people think about the markets, especially, struggling traders, is they like to look at it as quick money, and they like to look at it as more like gambling. They don't treat the market as a business. They rather treat it like a casino. So, at a casino, you go in, you play some cards, blackjack, maybe you lose one game, but you keep playing, you lose again, you keep playing, you make one win. Over and over, it's a repetitive process, but overall in a casino, the house always wins. Doesn't matter if you take some money home, the house will always win in the end. And in trading, what you have to do is learn how to think like a casino. A casino only risks their money because they know that they have an edge. Whether it's a 1% edge or even a 0.5%, they know that over the long term, they will always make money, period. Now, as a trader, this is exactly the mindset you need to have, and this is exactly how you need to trade. So how do you trade like a casino? Well, during your studying period and your period of learning as a beginner, you've learned certain patterns, and you've learned these patterns that have higher probability or higher edge of working. So sticking to these patterns and only sticking to these patterns will guarantee you make money over the long run, assuming you follow your risk management, but we'll get into that later. Now, main issue here is a lot of traders know these patterns, but they don't stick to them. They may trade these patterns once in a while, but when they see a stock just randomly ripping up on no news, or maybe it's a pump and dump, they'll just jump in out of emotional fear. We call it FOMO, fear of missing out. These are the stocks that destroy traders. I mean, if you want to be a trader, you need to stick to your niche. You need to stick to your edge, because if you stray away from your niche and you start trading randomly, you're going to produce random results, and that is not what we want as traders. We want consistency, and we can only get that through trading the setups that we know have a high probability of working. So once you've become disciplined enough to stick to your edge and avoid all the noise, now comes the struggle of sticking to your plan during each of these trades and just avoiding those big blow-up losses. This is the key step you need to take to really propel your trading to the next level. So these big blow-up losses usually come on the trades where you're really comfortable with and have a lot of experience with. So you get into these trades knowing that they have a high probability of working, but you're not ready for the unexpected. What happens if this trade goes against you very quickly and you're just too slow to react? This is where the fight or flight mode switches on. Every trader's been through a trade where they have a set stop loss, the trade's going in their favor, then all of a sudden, boom, it just spikes up or goes down, whichever side of the trade you're on, and you're thinking to yourself, okay, this is not normal, this shouldn't happen, it should retrace, right? It should go back. But then for some reason the trade just keeps going in that direction and it keeps going against you, and you're really just sitting there clueless and just scratching your head thinking, what the hell just happened? Now the trade just keeps going and doesn't give you a real chance to minimize your losses, so you just have to cut it off and take this massive horrendous loss. So these type of trades will happen over and over again, and you will blow up over and over again, guaranteed, unless you shift the way you think about the markets completely. So what do I mean by that is, you need to start thinking about the market in terms of probabilities and stop thinking that you're always going to be right on every single trade. That's just not the case, and if you think like that, you're going to lose over and over again. The market is a very random place. It's a very chaotic and crazy place, and you cannot control the market. Just remember this. Your position in a trade does not affect the market at all. You have no influence on the market. Your thoughts have no influence on the market. Regardless of how good your strategy or your edge is, the market will do whatever the hell it wants. And this is something you need to really accept. So now your primary focus is to shift the way you think about these trades before you take them. Before every single trade, make sure you accept the risk fully, 100%. Make sure in your mind that you are completely comfortable with risking X amount of dollars on this trade before you take it. Once you've accepted the risk on the trade, you've planned your entry, now you need to accept the fact that the outcome will be random. Despite having an edge and knowing that your edge works, let's say 70% of the time, there's still that 30% that it cannot work. So always be aware that the trade may not work in your favor. Entering a trade with this mindset really makes it a lot easier on you mentally. What it does is it removes the expectation from the trade, knowing that this trade can go either way and you have no clue which way it's going to go, completely reduces the stress, and it's really just a matter of whether it hits your stop loss first or your profit target. And it's as simple as just watching the stock, having your finger on the trigger, ready to either stop out of the trade or take your profits. So to sum everything up here, once you've developed the discipline to stick to your edge and have fully accepted the fact that each and every single trade you take has a random outcome which you have no control over whatsoever, trading becomes much easier and sticking to your plan becomes much easier when you don't have an expectation for each trade you take. Knowing that your edge works over time is all you need. And once you implement this mindset, you'll be well on your way to doing what 95% of people fail to do, and that is to make money in the stock market consistently over and over again. That's it for this video, guys. Hope you enjoyed it, and we'll see you in the next one.